Hello, friends. Today we're taking a look at Starbucks Corporation, ticker symbol SBUX. We'll be looking in this episode just at the usual things that we do. We'll look at the 5-year performance. We'll look at the latest earnings report, what analysts are projecting, especially for next earnings, which is next Tuesday on January 30th. Then we'll jump into my Excel sheet and look at the earnings and the revenue, the historical free cash flow, book value, dividend, and all of the different metrics that we normally take a look at. And then we'll try to find a fair value for the company to see if it is a buy. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. If you like what you see, if you like the content, please leave a like and a subscribe to the YouTube channel, or if you found us in a podcast, just leave a review and any comments. I will try to read them. I really appreciate the support that you guys continue to give me. So let's jump right into the data. So in the last today the stock is flat at $92. Last 5 days it's still kind of flat. It's just at 0.1%. In the last month, it's down almost 4%. In the last year, it's down 13%. And in the last 5 years, it's up and down, but right now it's up at 45%. And as you can see, it has had a lot of ups and downs, this stock. And we will taking a look at what maybe why that's happening. It's a little cyclical, and a lot of fears of recession and different things have affected them to the point that they actually had to bring the CEO out of retirement. The price target that the analysts are thinking in the next 12 months is $116, which will put it at almost 26% on the upside. So that will put it somewhere close to the 52-week high on back in May. So they pay a dividend of $2.28. The ex-dividend will be on February 8th, and that dividend is about right now at 2.5%. In the current prices, somewhere around there. The PE ratio is at 25 times earnings, and the forward is at 22 times earnings with an EPS of 3.58. For those that don't know who Starbucks are, Starbucks is pretty much a coffee chain, international. They sell mostly coffee and drinks. They do have breakfast and different bakery stuff that you can buy, and they're pretty much everywhere. A couple of in the last earnings report, they beat by a little bit, and that was on November 2nd, and the beat also on revenue by almost $1 billion. And is it a billion? Well, $92.8 million. A lot of money. They are expecting to continue to go up when it comes to revenue at $9.6 billion. I know that part of the reason that they have been struggling is because of the economy, precisely I think it's in China. It has been affecting them, the recovery over there. They're expecting their EPS for the quarter to be lower than the last quarter, somewhere around 96 cents for the GAAP EPS, which compare with the last year's first quarter, it will be quite a jump from 75 actual EPS. So 94, that's a pretty nice jump. So let's look at the historical valuation. Now we're going to be jumping to my Excel sheet, and if you would like a copy of my Excel sheet, please go to Buy Me a Coffee. That's where you can find it. Also, I am working on trying to make my Buy Me a Coffee page a little bit more, give you more content. So I will be letting you know probably by February I'll be starting that. So just go and visit over there, leave me a comment, or get yourself this wonderful Excel sheet. The revenue per share in the last 10 years, it has grown at 11.2%, which is really good. The last 5 years has slowed down a little bit at 7.7%. In earnings, once again, it's a little cyclical, but it in the last 10 years have been growing at 10.2%. And once again, it slowed down in the past 5 years, almost remaining a little flat. You could say that it has grown at 4.1%. Profit margins are at 11.5%, which is not that bad. Free cash flow, they had a huge free cash flow year on 2018, but if you just ignore it and look how it has been growing, I think it has been growing somewhere around 10%. The calculations doesn't really get it because it was a negative, and in the last 5 years, it's been 4.4% of growth. Free cash flow margins at 10.5. That's a pretty good number. This is one of the problems that I have with Starbucks. I would love to buy Starbucks. My wife loves Starbucks. I have a lot of people that like Starbucks. I'm more of a Panera guy, which I'm looking for next year's IPO. But the problem that I'm looking is that it just keeps going negative. The book value per share, it is negative. And I think this has to do with the debt. So because of that, their return on equity is negative almost 50%. Return on asset average in the past 5 years, 14, which is pretty good. And return on invested capital is at 22.5%. This is part of the reason why they brought back their CEO out of retirement, because they need to get organized. When it comes to dividend, Starbucks is a beloved company for dividend investors. It's been growing in the last 10 years at a 15%, and in the last 5 years slowed down a little bit at 8%. Still pretty good. However, the payout ratio at 63, it's a little high. I like it to be somewhere around the 50s. So as you can see, the debt has grown. It has doubled from 2019 to 2020. And it will take them about a little more than 7 years to pay off the debt that they have, the long-term debt, with the 5-year average of their free cash flow. And when it comes to shares, they have been doing a good job buying back shares in the past 2 years, almost at 2.7%. That's almost 3% buyback. That's really nice. When it comes to the last 5 years, they have slowed down a little bit at 1.3%. And I think that the story of Starbucks really has to do not with the revenue. Earnings have been hurt a little bit because of cost of chocolate and the cost of different things. But I think the main problem is the debt and the book value issues. That there's a little bit of a cash flow issue with Starbucks, I believe. So I wish that they could organize that. However, analysts are expecting them to ramp up at 17%. And I know the big of the story behind Starbucks is the China. Since China has slowed down, their economy is slowing down. That has affected them a lot, or at least that's in the views of analysts. So a lot of analysts think that they may get back to normal soon. So we're going to be jumping into valuations. So I just want to give you a little disclaimer that I'm not a financial advisor. This is just for educational purposes. I am a YouTuber, just sharing my thoughts. And please remember, do not invest based on my thoughts. With that said, let's jump to the multiples valuation, looking at the historical values. Historically, based on the multiples in the past 10 years, you expect the fair value based on historical multiple to be somewhere between $90 and $108. When it comes to payback time, looking at the free cash flow growing somewhere around 6%, we could expect a fair value of somewhere between $66 to $85. Whenever we look at the discounted earning valuation, we're looking at somewhere between $57 to $71 as a fair value, and owner's earnings somewhere between $68 to $80. So whenever we put everything together, I am ignoring the book value just because it's negative. We're looking at somewhere between $80 to $95 as a fair value of the company, especially with all the different issues that they have. So I will personally, for me to be wanting to buy this because of the book values and because of different areas, I will have to have a large margin of safety. The minimal that I will go for is probably at 20%, which will put it at $70. So that will put it close to the big, somewhere between, that will put them really close to the big dip that they had back in 2022 last year. I really think that there's a possibility that it hits somewhere around $73 to $75 per share. Once again, don't listen to me. A lot of analysts are thinking that it could get to $115. I don't see with all the issues. However, this is a very a company that a lot of people like the stories and like the things that they're doing. So if you think that analysts are thinking that it's going to go up there, if you really trust them, this is a nice swing trade. I will probably, if I was thinking that, I would probably buy it somewhere under. I will be expecting a low number, a bad earnings, and then maybe buy it on the deep, and then collect some of the dividends and maybe sell somewhere around once it hits $110, $115. So that's my opinion. I hope that you enjoyed the video. Hope to see you, and I hope that you enjoyed it. Have a nice one.